Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It is Thursday. I know I messed up in the morning. You know, lots of going on. You walk in, futures are down 35 handles, etc., etc. What happened today? I think a lot of people are kind of upset on both sides of the tape. I know I came in short, spiders and Apple, and was thinking that we should, get down to 1812, and I wrote down a whole plan for everyone on Twitter, and more in depth, obviously, to my Redler All Access note. Three things that could happen. One, we stop before 1812, so then the shorts that are trying to push it through get squeezed, and we never get there, which already happened earlier this week. Two, we get there, tag it, and go. Or three, we go below it, and stops get triggered and fear happens, and we all of a sudden get down to 1790, 1718, 1780, 1770, and get some kind of real capitulation. So, but throughout the course of the morning, tech was strong, so they couldn't get all the stars to align for a real down move. You had Amazon up $7, $8. You had Google not going lower. Facebook, kind of looked very bouncy. You had Cisco that had good earnings, on the highs of the day all day. You had Disney reversed. You had all these things saying, we might not get the pressure needed to break that 181 or the 1812 to get a real big move. So I think a lot of us were a little hesitant anyway. So no one was like ready to press there. I know I was, and I was covering into that move and sitting. And then boom, the news hit from OPEC or from someone from Wall Street saying that OPEC's getting ready for a deal. You had an igniting bar. And you guys remember what I talk about with igniting bars? You do not short an igniting bar. If anything, you cover, see if there's commitment to it, and you try and flip. And then you saw a little continuation with a choppy flavor, into the close. So let's just get to the charts. You go back here to the chart of the SPX, and you will see here was your red dog reversal back on January 20th. You had your move up that failed, okay, into resistance in 1950. Then all of a sudden today, what did we do? Almost to the T, we tagged the low here. So let's get an even closer look so everyone could see the prices. Okay, so here was, what was today's low? Today's low was 1810. Did we even get below that? And what was this low? This low here was 1812. So we actually went through it by two handles. So you could have had a red dog reversal for two handles if you had it programmed on your high frequency trading vehicle, which I don't have. And then boom, a 26 handle move above it. And I think it might be even a little different because my E signal is a little slow into the close. So let's go to the spiders and see how what would that do. Spiders gave you a green bar. Did close, I think, closer to 183-ish. This did not go through the low. Okay, this low here, if you wrote that down, was 181.02. Here you have 181.09, so 7 cents difference. I guess the way different text or whatever is in there, etc., etc. And then closed well, and I guess we'll see what happens tomorrow. We'll see what kind of open. You have a gap that needs to get filled if it wants to, or if it stays open. We'll see. Yesterday you had that red dog reversal right around this pivot, which was 186.94, failed at the 8-day, came down. That's why I was short. We were not oversold, we were not overbought, we were in a downtrend, made sense, covered into the spot, and now what? Let's see what you could have seen on the 5-minute as far as switching gears. Okay, so let's go to, here was your gap down, little bar by bar analysis, came up, and then, this is where it stalled. Here's when, you could have had your little H cell set up, right? Boom, came up short here, and then you could have added when it broke the low. Didn't give you much, okay? And then it messed around. But then look at this, guys. I know, I know it was on news or whatever it was, but what did we say the last time about igniting bars? This is an igniting bar. This bar just took back basically almost an hour or a few hours of the range. So you cover into that. Okay, so that's what I did. I covered real quick, and I actually got a little long, right around that 182.30-ish area because I knew that it was trying right around there to do it. So I got long, didn't pull in much, and then made some decent money up to this 184. Okay, so that was nice. And then, it was wedging. So I wasn't sure which way it would go, but then everyone was talking about how the article wasn't real, and people took it too literally, et cetera, but all in all, you had your move one, got tight, and he gave you another move before coming back into the close. But all in all, this was an igniting bar that had a little bit of commitment to it. You could probably see it a little bit different on the 3-minute that gave you another move. Okay, so does that mean the bottom's in? I don't know. Like, I went out flat. I just, at this point, it was funny. I was talking on the desk, and and when we were down around 182, 181.75, I'm like, it just feels like, because we closed on the lows yesterday, no one really got caught long. Most people went out short. Active traders who look for follow through. You close on your lows, you go out short, you try and buy it in the hole. Great trade. So I'm like, something has to happen to create something different. So I'm like, imagine they just do some kind of rally. Everyone covers their shorts, because if you're not committed to it like me, you cover. Then all of a sudden, tech led the way. High beta was strong. You had a mini reversal. Everyone gets long. And then tomorrow we open down. And then everyone has to hit out their longs because they're trapped. And then nobody's shorting 181 anymore because they're trapped long. And then that gives you the capitulatory move on Friday or into Tuesday when we're closed Monday. But that's a lot of thinking. So don't think too much, just react. If we go to the Qs, you see here, the Qs, by the way, look at the size of this igniting bar. This and this actually didn't make new lows in the day. This held above it. The spiders made new lows in the day. This held above it. People ask me about the red dog reversal on a 5-minute candle. Well, from 96.38 to here, it pushed below 95.41, put a low here at 95.28. It's only 20 cents worth of risk. So an igniting bar comes up, you cover, it held somewhat into it, the top half, and then this was, could have been your buy, gave you a decent move, and then again, kind of flagged and wedged, and what did it do? Kind of with sides of tails, it held the 8-day all the way near the close, and then some people got a little worried. So again, that was your igniting move, little sideways action, and a little continuation. The names that were strong all day, you had Facebook, which just like the rest of them, an igniting move, not near the lows, so that was showing relative strength. If you go back to the spiders before that, spiders here made new lows. So watch that. Spiders make a new low below this pivot and below that pivot. Facebook, did it make a new low here? No. Facebook was a higher low versus here and versus here, so that shows you relative strength, and that's why it moved better. Go to the daily chart. Does it look like the bottom is in? I don't know. It still looks kind of wishy-washy, and I don't know if that was a real print there. All in all, it came off your red dog reversal here, trying to bottom, put a higher low in. So it's trying to show some relative strength again. So some of these high beta names are trying to show relative strength. Amazon, I talked about in my note, it being perhaps the best thing to go to. It was down 8 because of the $5 billion buyback, and it made a little red dog reversal around this 486 pivot and closed well and was stronger all day. Very broken, definitely very broken, but for the day it was a lot stronger. Google wasn't as strong. It also made a higher low. So a lot of these high beta names did not get down to the lows of January 20th. They held higher. Here's your January 20 low. Here is your recent low. It held a little higher. So something small, constructive for these things. We'll see. If you got out when it did this fake out after earnings with that 800 price we talked about, maybe you did something in there. Netflix was a little weaker, but it had a better bounce, recently, and still just needs to build. Here was your low. There was your topping tail, and then today made a little bit of a higher low. Well, I guess we'll see what happens here on these lower pivots. The banks were definitely a problem all day. The banks, weak all day long. Just so you know, guys, again, I reiterate this on Twitter all the time. This is a rule. If you want to get a pen and paper, write it down. When you're an active trader trading for alpha, you're only in a swing portfolio from the long side when we're trending above the 8-day and the 21-day. That's when momentum is strong. That's when you hold 6 to 8 positions. When you're below the 8 and 21-day, you're no longer in swing trade long approach in a lot of positions. You're more tactical, looking for longs and shorts as things test the 50 or 100. But when things break the 200-day moving average and stay below them, they're not even investments. They shouldn't even be investments in your 401k. You should not hold your nose and go under. Okay? And a lot of the names that have been battered and bruised, if you look where they broke the 200-day, if you would have got out then, it might have hurt, but you could have saved yourself a heck of a lot of money. One of those names is Bank of America, which we made a lot of money over the last few years. But look, when it broke the wedge here and got below the 200-day. Bank of America got below the 200-day moving average when it broke this range around 16. Nobody probably knew it was going down to friggin' $11, but you didn't have to if you got out of it right. And if you waited, this was the last year's lows that it broke below, and that was over at 14 and change. I don't care if Mike Mayo said to buy the banks right here. Still below the 8-day this entire time and below the 21-day. Not above it like it was here, or not above it like it was for the majority of this move. Wasn't this a nice move? It was above the 8 and 21-day the entire time. Okay? Not below it like it was during that move. So anyway, banks still a problem, but they're very oversold. I most likely would say, if you've been short the banks, I would be covering today. I don't know if you can get long, but I'd be covering. Goldman Sachs has been also just battered and bruised, and it too, came off the lows a little bit, and again below the 8 and 21-day this entire time. Look when this below the 200-day. It's oversold for a bounce, but every bounce has been sold. It's a little bit further than it's been from the 8-day, so maybe you'll see what happens tomorrow. Oil, one of the things, it took a while for oil to bounce on that news headline. That's why a lot of people probably stayed short. Like, oh well, if the oil is saying that they're going to have a meeting, why isn't oil bouncing? And just the market's bouncing. So anyway, a small little red dog reversal here. It's got some room if it wants to get back up to the 8-day, which has been controlling this bounce. Some guys made some quick money on the DWTI into that. You now have another red dog reversal. Last time you had a big, bar like this, it did create downside. Here, you have another one, small little outside day. So perhaps if there is something to it, maybe this comes in. So if you happen to have the stomach for it. By the way, look at how these things are built to go to nothing. This was at 480. No, actually 484. When oil was at this area. So oil made new lows today, and it was still about 70 points below the prior high because of the decay. So make sure you know about ETFs before you just trade them. So in closing, it's Thursday. It's been a long week. The SPX tagged 1812, actually went to 1810. And whether that news was planted there or whatever it was, it sparked a rally. You had a little bit of time to adjust to maybe cover some shorts, use the igniting bar, get long, and then it's just a question of how you want to be positioned tomorrow. For me, I'm going to be flat. I'm 4 for 4 this week, knock on wood, just trying to be consistent. I've been playing the short side a little bit better too, but I'm not such a good short that I have such conviction that I know where I think we might be going into the 1700s, but I'm not going to be short after the action like today. I'll wait till tomorrow to figure out what's next. And there's lots of movement, lots of big ranges, lots to do as far as the prep side. Keep getting your prep ready so when fast moves happen, you could embrace them and get on board versus figuring out how you have to act and where the levels are and what's strong, what's weak. The better you are as far as being prepped, the better you will be when things move fast, and you could put 1 plus 1 together and hopefully make a lot more than 2. Scott Redler, the recap. I will be in Short Hills tomorrow. I will be on Twitter. I wish you the best of luck, and Thursday night, go out for some drinks and have some fun.